Well, I had a pretty volatile childhood, which probably has helped. It's done a few things, I guess. I would say it's probably put a chip on my shoulder to want to create outcomes that were very different to my childhood, especially for my kids, and just in general for my life. When my son was coming along, and I kind of went through a bit of a position shift in how I viewed the world, and that really was the catalyst for wanting to build wealth and build businesses. Because all of a sudden I was like, oh, I've got to build something, a legacy almost. I come from the UK, it's a class-based system. I was in a working class, broken family with some severe issues. I did poorly in school. Based on what people thought of my parents, there was also a judgment on me instantly. And I needed to leave in order to reinvent myself, because I felt like I was always going to be held back by that. Totally liberating. I'd suggest if you ever feel stuck, just change your physical location, because it will unlock so much. Yeah, and that was really the start of building a life for ourselves. Great. Hello.
Hi. So today, Charlie, it's all about you.
Yes. We're going to do a week where we release both of ours at the same time, so people understand how we got here and view, I guess, the questions that we ask everyone else.
Yes.
Yeah, so it's cool. We are now quote-unquote podcasters. We have recorded 20-odd episodes.
Yeah.
So that's really cool. And then once they're released, we'll have beaten most of the statistics around podcasts that don't quite get
Oh, really? Oh, I didn't realise that.
I don't know what the stats are exactly, but I think 99% don't get to 20 episodes.
Oh, okay.
So if we can just get there, which we've already done all of the recording.
Yes.
So we're actually basically there. It's just on us to actually release them.
Yeah.
Which is surprisingly hard.
Have you learned, have you?
Which I think we've learned is that we have this backlog, and then kind of getting them out. We've gone from 1 episode a week now to 2.
Yes.
So now we're doing
I did
2,
see that.
which is cool.
Yeah.
Yeah, and people are excited to get their podcast out there. So we have quite a long turnaround time because we have this backlog.
Yeah.
Which we designed it that way so that if we needed a week off, we could. And it just means that we've got lots of nice content flowing, and it's quite cool. But yeah, I guess over time that backlog will naturally shrink, and then the episodes will come out faster.
Awesome.
That's the goal.
So why was it that you wanted to start a podcast?
So I have lots of conversations in this room. I spend a lot of time talking to interesting people in this room, and figured that actually it'd be cool to kind of share some of those conversations. And I just thought the setting and design of this room was well suited for a podcast.
Yes.
And then when we met, I was like, Helena has a lot of skills, probably on the empathetic side as well, that I don't quite possess. So we should team up and do a podcast. And then you have 2 guests that are not necessarily the same as well. And perhaps that would create a more diverse conversation and allow kind of, I guess, different angles of questions to come in and different perspectives. So that was the goal. And I think we've achieved that. I'm pretty happy with what we've done. And I think the podcast has come out, the quality of the content and the recording and the production has been in line with my expectations, maybe potentially exceeded.
Awesome.
So thank you for coming on this journey.
Thank you.
And it's fun, right? Because we were talking about, we've learned a lot.
Yeah.
And had some cool conversations with people, which is just recording the podcast is just automatically a benefit to us because we get to have those conversations.
Totally.
So yeah, I'm pretty happy with that.
Okay.
And it's enriched my life and probably creating a wealthier life for myself.
Yes. Yeah. So, Waste of Wealth, that came about because of eccuity, right?
Yes.
So how did you start eccuity? And what is eccuity, I suppose?
Yeah, that's a good question. I think if we think about eccuity, I guess there's a backstory to it in how I got to start building eccuity.
Yes.
Which I guess if you go far enough back, it's about, wanting to build wealth and wanting kind of I guess, non-linear outcomes from my life. And I don't think I'm the best employee as well. So I had to start a business like really young.
Yeah.
So I built a manufacturing business in the jewellery industry. I was a goldsmith by trade. Didn't really like the industry, but it was very good for someone quite young to make quite a bit of cash.
Yeah.
And then kind of utilizing that income to not work as much as I needed to, really,
Yeah.
to then retrain into tech. And previous to that, I was into professional gaming. And I think I learned a lot about kind of game theory, teamwork, dealing with uncertainty through my gaming experience and playing professionally across various games. And that was my passion, gaming and tech. So wanted to ultimately build a gaming platform, which we did. And so basically moved from goldsmithing, had a stint at a gamification startup, building for helping people to incentivize them to recycle more.
Yes.
And then moved into the gaming kind of platform, or building our platform, which was basically air miles for video gaming. And it also had some really cool tournament software that we'd built too. And we grew that to 400,000 users in 18 months. Struggled to monetize it consistently. We were beholden to the game developers and the game publishers in quite a big way.
Yeah.
So I learned a lot about the industry and what wasn't great about it. We were the 8th most popular platform in the world, and we had raised, in terms of capital, just a fraction of what everyone else had.
Okay.
And some of those companies that had far less users than us ended up going public. And one of them was worth about $300 million at one point. And the top player, which is called Skills, they'd raised hundreds of millions of dollars USD. And they were at one point worth 15 billion. They're now worth, I think, 100 million.
Okay.
So that kind of IPO era that we saw in kind of 2020 to 2021, has kind of shown that maybe a lot of the companies that did also go public probably shouldn't have. That company that was worth 300 million, I knew a lot about them, so I shorted them when they went public.
Did you?
And they went to zero. So
Wow,
it was
okay.
awesome.
It was awesome.
And that was when we were starting the business. So
Okay.
So now to, I guess, get a little bit to where we're at today, or how we kind of got there, is after I kind of exited from the gaming business, I started getting into investing. And, I had some ways, I guess, I thought about the world, and I wanted to have a relatively active approach to my investing. I wanted to own the assets I bought. I wanted to be in control of how I allocated capital. And I wanted to bring kind of, I guess, a systems approach to investing, and looked at a bunch of different disciplines. So value investing, quant finance, macro, and Austrian economics were kind of some of my key and favorite parts of investing.
Austrian economics, did you just say?
Yeah.
What is that?
Well, so that talks a lot about hard money.
Okay.
And it is a discipline of investing, I guess, where it's very value orientated, and it thinks a lot about the value of money, or the value of kind of hard assets. So they like gold.
Yeah.
They're quite, and they like tail risk insurance. So hedge. You know how you buy insurance for your life,
Yes.
or your contents, or
Yes.
your car.
Yeah.
So the Austrian economics school, kind of spend a lot of time thinking about insurance for your portfolio.
Okay.
And subsequently, since I started investing, I too think a lot about how to insure my portfolio against tail events.
Yeah.
So
what would be an example of a tail event?
So recently we had a lot of volatility in the market and it's bounced right back.
Yeah.
And you wouldn't call that quite a tail risk event because it was so short-lived, but it was the kind of start of something that could have been substantial and quite a tail. So tails are on the kind of either end of the distribution of outcomes, and what you're trying to do is protect your self from an adverse tail event.
Yeah.
And yeah, so recently there is a quite technical component going on with the yen in Japan, and a lot of people are borrowing in Japan and then taking that capital and then investing it overseas. And they get a spread because it's basically free to borrow money in Japan. And then, you know, interest rates are higher around the world.
Yeah.
So that creates a lot of leverage. And when that changes, that's when you're likely to get a tail event that is adverse to your portfolio.
Yeah.
But yeah, so tail risk is really interesting to me personally. It's very hard to implement. Therefore, it's hard for everyday investors to get access to it.
Yeah.
But before I even kind of got to that point, when I was building my own strategy after exiting the gaming business, I realized how fragmented the industry was and how very difficult it was to implement the strategy I wanted and to execute on it.
Yeah.
It's, you know, we validated that through lots of other retail investors that have kind of echoed the sentiment of kind of one thing coming up with a plan, but it's another thing then executing on the plan, both when you've made a bit of money and then like kind of getting out when you said you were going to get out, like kind of setting your rules and then having systems in place to kind of actually execute on your rules. And then just in general, being able to actually be like, okay, I'm going to dollar cost average every month to these two buckets of assets, and each of those buckets have a purpose.
Yes.
And I kind of think in that way of systems of this part of my portfolio is doing this, and this other part of my portfolio is doing this. So for example, for me at the moment in my kind of long-term investing, I'm buying a concentrated portfolio of companies that I think are undervalued. Yeah. And then on the other side, I have a quite conservative yielding portfolio where I've got a bunch of bonds and high yield instruments that I just invest into every week.
Okay.
Alongside that, I also run the trading strategy, the quant trading strategy or systematic trading strategy that we've been running since 2019.
Yeah.
So those are my three core areas that I invest to at the moment. And what I found is it's really hard to know where you're at if you've got different accounts. You've got assets all over the place. You might think that your KiwiSaver is different to your brokerage account, but actually you're holding the same things. Yes. So because of that, and then not to mention all the information about the assets is all over the place too.
Yeah.
So in terms of eccuity, one, we wanted to kind of bring access and kind of make executing on kind of your strategy easy, cost effective, free of conflicts where like as best as possible, and just bringing as much information into the platform as possible. And then utilizing AI to actually then be a delivery mechanism for users so that they can easily understand in a digestible way what's going on. So I guess we built a strategy, we found that there are lots of issues around executing, so we've kind of tried to solve for that. And in Australia and New Zealand, it's the most expensive country in the world to consume financial products. So again, getting all of your assets into one place and then analyzing the fees, the performance, the correlation across them can be really helpful. Yeah. And really serve a good purpose.
Okay, so how do you start that ball rolling? Right?
Yeah, so we incorporated our holding company, Medition.
Yes.
And we started doing R&D on our strategy to begin with, our own proprietary strategy that still runs today. And we knew we wanted to build a platform from the start, but we spent a couple of years actually just tinkering and really learning the industry and learning some of the problems that exist. I guess for us, we, between the founders, had the resource to spend the time tinkering, and then we've raised some capital once we knew what we wanted to build. We then raised some capital to build out the platform, which we've now done. And now we've recently raised a little bit more capital to then take the business and revenue streams that we've created and then basically scale those out so that the business can be a profitable and sustainable business. So that's kind of the approach, is like first you kind of tinker and ideate and you try to keep the pressure as low as possible, so that you can find out signals that might be worth solving for. So finding some problems that you can solve through technology in our case. And we found a lot of issues and a lot of problems that we could solve. And perhaps we even went a bit too deep initially in terms of building maybe product that was a little bit too much. And we've kind of continued to cull it back and work out really what's the core of the issue. And for us at the moment, a lot of that is portfolio construction. So we believe that everyday investors, in many cases, haven't built a portfolio with a purpose from scratch. And that's something that we really want to help people kind of solve for, is like, hey, you know, your investments don't have to just be one thing. They can be a few different things, and perhaps it's really good and beneficial to understand what it's trying to achieve. Rather than be like, well, asset has to go up and it just has to go up as much as possible, and I'm happy when my assets are going up. Because then obviously you get high expectations, and then people then get disappointed if there's volatility. You know, if you're, you know, relatively young and you're kind of almost at your peak or getting into your peak of earnings, really you want assets to just get really cheap. Like, the dream would be for someone that's about to reach their peak in earnings is to have a massive crash where they can spend the next 10 years accumulating assets. Like, that's the dream. But it's kind of, but a lot of investing is kind of seen as we're kind of taught, or maybe psychologically, or humans are very much built to kind of receive small bits of gratification, like, consistently. They'd much rather that than not having the gratification for a while and then having a large piece of gratification, you know, when it plays out. And that's what starting a business is all about, is that you're making incremental steps every day, but you often don't get those incremental bits of gratification straight away. It's delayed. And, you know, I often talk about, you know, you don't really want linear micro doses of, like, kind of these dopamine hits. You want to say, no, I'm going to go for non-linear returns, and I'm going to build a business, and it's going to suck for years probably, and be really hard, and then all of a sudden it works, or it hits an inflection point where all that hard work pays off. And I think that the activities you do in life, like I spend a lot of time doing jiu-jitsu, that has helped me learn about kind of not needing those reliable little incremental wins.
It's about delayed gratification.
Getting as much delayed gratification as possible, and from allocating capital. You know, our trading strategy has over $1 million in it. We put serious, you know, we do a lot of work, and, you know, we've put on interesting trades where we've managed and taken risk in a way that we believe appropriate for, you know, the information we have and kind of what we believe to be, I guess, quote unquote, true. And that teaches you very acutely, like, how to deal with delayed gratification and how to deal with the, you know, you can be wrong for 6 months and especially with public equities, and we're going to talk a bit about, you know, the move towards private assets that especially has taken hold in New Zealand, but also around the world. But, you know, with public assets, you get a quote every day. You know, you don't get a quote every day on your house. You don't get a quote every day on our business. We don't know what it's worth on a day-to-day basis. But with public equities and publicly mark-to-mark based assets, you get told how good you are every day, which is cool, but can be challenging if you make that part of your identity. And you can be wrong for 6 months, and then all of a sudden in 2 days you're right.
Yeah.
And then the investment has paid off. And that's more from a trading perspective. I'd say that's very different to just trying to build wealth incrementally over time. So that delayed gratification is good. And I think what I try to focus on is like, did I do the work? Mm-hmm. And I kind of measure myself based on like, did I do the inputs? And did I do the work to understand the specific investment or trade idea to then execute it? And if it doesn't work out, then, have I designed a way to make sure I'm managing my risk? Yeah.
So how did you go about kind of creating a mindset to put you in a position where you're okay with that kind of, emotional upheaval, depending on how you cope with it?
Well, I had a pretty volatile childhood.
Okay.
Which probably has helped.
Yep.
Yeah, so relatively volatile kind of upbringing probably has influenced my... So it's done a few things, I guess. I would say it's probably put a chip on my shoulder to want to create outcomes that were very different to my childhood.
Yes.
Especially for my kids.
Yeah.
And just in general for my life. And you kind of veer very kind of... That's volatile in itself. Like I remember when my son was coming along, and that was the first of the bunch, and I kind of went through a bit of a I guess position shift in how I viewed the world.
Okay.
And it kind of went, and that really was the catalyst for wanting to build wealth and build businesses.
Yep.
Was because all of a sudden I was like, I've got to build something, a legacy almost.
Okay.
And I think then when you have a few more kids, you then forget about that a little bit.
Yes.
It's kind of this extreme thing where I was like, I've got to be remembered beyond like my life. And I actually I think I've retracted that a little bit, because I think that becomes a little bit egotistical and a bit, it wraps your identity up in what you're doing a bit too much.
Yeah.
So I think and as humans, we tend to kind of veer to extremes. Yeah, so definitely then, I come from the UK, it's a class-based system. I was in a working class, broken family with some severe issues. I did poorly in school, and based on what people thought of my parents, there was also a judgment on me instantly.
Okay.
Which was really frustrating, incredibly annoying. And I needed to leave in order to reinvent myself.
Yeah.
Because I felt like I was always going to be held back by that. So I came to New Zealand as well when I was 15. I went to Auckland Grammar. That was a real transformational kind of year of my life. I made some great friends here. I loved the schooling system here versus the UK.
Okay.
Excelled in sports, and just had a good time. Just the vibe here was awesome. So that then when I moved here again, it was influenced, I guess, by my time when I was a little bit younger. Anyway, so we moved over here, and we had nothing. And we had like 3 suitcases and $500.
Yeah.
Rented a house in Queen Street or something. And it was an opportunity for us to reinvent ourselves, rather than having the inputs of like family.
Yeah. Quite liberating.
Yes, totally liberating. And I'd suggest if you ever feel stuck, just change your physical location.
Yeah.
Because it will unlock so much. Yeah, and that was really the start of, I guess, building a life for ourselves. And as soon as we got pregnant, I was like, I've got to do something worth doing. Yeah.
Okay. So with starting eccuity and bringing it along, what has been the most challenging thing that you've come up against?
I mean, there have been challenging moments where the business moves on and, like, you know, you have to evaluate the team you have at the time and, you know, who's the right person for each role in the organization. There have been times where there are delays that are completely out of our control. For example, we allow the trading of cryptocurrencies, and getting banking relationships, etc., is, I would say, an order of magnitude harder than if you are not doing crypto assets.
Why do you think that is?
Well, that's just because of the AML KYC environment. It isn't as well known how to track and validate income, source of wealth, etc. Through crypto. We have some great systems, and we've managed to persevere with that. But that, you know, delay was significant. You know, so that delayed our launch a long way. So there are always these events and situations that basically are somewhat out of your control. So I think, you know, you have to be okay with having some aspects of the journey out of your control, and then you have to focus on the stuff that you can control. So that's been pretty difficult. Those have been some pretty difficult moments where you know, because you build forecasts and assumptions on kind of what you think you can achieve, and then when you get these curveballs, you have to rethink things and you have to reevaluate. Okay, well, what does that mean in a year? What does that mean in 2 years? Do we have enough funding to get there? Et cetera, et cetera. So one of the reasons we've never scaled up our costs to run our business, and like scaled, even though we could have, when, you know, as we've raised money, we've been in situations where potentially other startups or other situations we might scale our expenses up. But because of the industry we're in, we've always stayed extremely lean, which has been to our benefit, because if you're a startup and you feel pressured to grow and you raise some money, you know the only way to really grow is to spend that money, most likely. And what happens is if then your assumptions are wrong, the cost to undo that spend and to undo that trajectory of spend is hard to turn around. So we've been very focused on making it so that we don't have to turn off the engine abruptly and make mistakes because of that. So we've taken a pretty, I would say, slow approach to how we do distribution. I would say that the hardest bit of any new business, once you've built the thing, and we've built the thing now, is distribution and trust. I would say that's the hardest thing. You're new, even if you have a superior product and a superior pricing model, you may not have trust in the market yet, and there's, depending on the industry you're in and, you know, what you're dealing with, the inertia to move can be significant. You know, like when Sharesies came along, they were really the first accessible broker in New Zealand that was like relatively mainstream. So they weren't necessarily having to acquire users from other brokerages. It was in many cases perhaps the first brokerage account that the user would have had. But because of our target demographic and where the industry is today, you know, we're taking, I guess, what entry-level online brokers have done, and we're trying to take it to the next level of sophistication and better outcomes ultimately for customers. And because we're not exclusively a brokerage, we are a platform where you can connect multiple brokerages and connect all your assets. We actually don't mind too much where your broker is, and because of safety reasons, customers in some cases want multiple brokerages so that they have some diversification in the assets that are held at different institutions. But in the case of our brokerage business, the inertia to move, even though it makes a lot of sense, especially from traditional brokers where they might have a personal relationship. That process always takes longer than you expect, and you have to help coach people through. You have to, you know, because at the end of the day, we're competing against other businesses. We have a compelling offering, so it just makes sense that the competitors, you know, want to keep their clients. So they're going to do their best to try and keep the clients. So it's a little bit of a backwards and forwards battle.
How do you build that trust so that they trust you enough to move over?
So we've always taken a very transparent approach. So like when we first started, we were like, okay, we're going to be transparent, low cost, and smart.
Yeah.
So thinking about actually kind of from a first principles perspective, how can you give people the best information? And we can talk about loads of different aspects in this area because I talk to industry a lot.
Yeah.
Across the spectrum from online brokers, self-directed, to wealth managers, investment banks, kind of like high net worth vehicles, because that's a real interest of mine too. And a lot of it's just being in market long enough.
Okay.
But you need to get people to value very quickly, like some sort of aha moment when they use a product.
Yeah.
So the quicker you can do that, the better.
Yeah.
And in the case of if it's a brokerage, they need to have money on their account in order to transact, because that's the aha moment. And then depending on how you're wired, like for me, I probably have designed our product in a way that is less pushy towards certain outcomes that are perhaps the aha moments, because I feel our kind of ethos is to kind of let people kind of experience perhaps, and we're not taking them down a guided journey.
Okay.
In some cases, and we've improved that. But like there have been cases where we've like left the journey open, thinking that that would be great for the customer, when actually in some cases you do want as a customer to be guided
Yes.
to the outcomes that you ultimately want, even if you don't actually know what those outcomes are yet or consciously. So a big focus for us in the design now is helping kind of create the right user experiences, and then getting those aha moments of value. It's really important as a product to think about how quickly can you get them to that moment where the light bulb goes off. And for our product, like there's so many cool features in it, but if you land there unassisted, perhaps you're not going to see all those great features.
You don't know where to look to start.
And then the second one is distribution, for sure. How do you actually distribute your product? And do you have great channels to do that? And when you're trying to disintermediate, the natural channels are maybe by default not there.
Yeah.
Because you're actually trying to take those unnecessary institutions or people out of the game because you believe that perhaps they're not necessary to get the outcomes that people want.
Yeah.
So that then means that you have to think of new channels and different ways to distribute, and we've had some success in that regard.
Yeah. Okay. So, what's some advice that you would give to someone who is having? So you've created 2 startups and a half, 2.5 maybe. So what advice would you give to someone who's like, okay, this is something I definitely want to do?
Yeah, with our gaming business, I got that live in like a month.
A month.
And within 90 days, we had like 1,500 users.
Wow.
You know, like, so in an unregulated space, and it was the same with our strategy. I mean, I spent 2 years building the strategy out, but then we programmed it, and it was 2 of the best. It was like we programmed it in maybe 2 weeks, the first version, and those were 2 of the best weeks of my life.
Yeah.
Our original co-founder, Richard, and I spent a lot of time building out the first version of the strategy, back testing it. And that was some of the most enjoyable moments, I guess, living and solving problems. So, like, execute really fast to have something someone can try.
Okay.
With the case of eccuity, it's a relatively large project, a relatively large build, and it's highly regulated. So that takes longer.
Yeah.
But kind of getting to points in time where you can test your thesis as fast as possible is totally the game. Like, you don't want to be waiting around for a couple of years.
Or you might miss the bus.
Yeah, that's right. So yeah, that would be my thing would be go and do it and make progress every single day. Like one of my first coaches in jiu-jitsu said, just get 1% better every day. And totally agree with that. Like, just turn up and grind and get in there and do what you said to yourself you were going to do. And then before you know it, you're 30 days in and you're ready to post it on some forums and see if people will use it. And that was awesome. Like when we did the first post for Uproar, like within the first 24 hours, I think we had a couple hundred users. Different industry to finance, so I guess the barrier to get a sign up, especially at that point in time, was quite low.
Yeah.
And we were spending 20 cents a user.
Wow.
To get acquisition. So
Yeah.
like, it was really good. But we had a great value proposition. Free product, and we will give you stuff for playing things that you already enjoy.
Yeah.
Yeah. So, yeah.
Okay. You have 3 children and a family. So what's your thoughts on intergenerational wealth?
It's a good question. So I had this whole starting point where I was obsessed with the idea of intergenerational wealth and kind of creating outcomes for my family that would kind of set them up for life. And I was quite young, so idealistically, I hadn't actually been through too many. I hadn't actually been through much of life at that point.
Okay.
So I was starting off I was becoming a dad when I hadn't lived much myself. So I guess I was quite idealistic about what that looked like, and I instantly went to legacy, intergenerational wealth, all these things. And I think I've got quite an obsessive, I guess, personality. When I get into something,
You're fully focused, yeah.
I'm focused. But I guess then I kind of wasn't enjoying like the process potentially of actually building a family.
Yeah.
So kind of through experience and through hardship, you kind of, I guess, learn to balance that, like to become more present when you're not at work, when you're not working. And that's very difficult for me because my brain is always kind of going on to the next thing that I want to solve for, or, if I'm left with a kind of something that I'm pondering, it's very difficult for me to disconnect from that. And I've utilized surfing and jiu-jitsu to force myself to get out of that moment.
Yeah.
But yeah, I think that it's a mixture between, I think the best thing you can give your kids is stability, and presence, probably.
Yeah.
And actually a little bit of freedom, most likely.
Okay.
I learned a lot because I had a lot of freedom. It was, it wasn't consistent. That's probably, I guess, that was the harder bit, and there was a lot of volatility for me growing up. But the freedom I had to build deep relationships with other adults and other people my age has served me very well in life. So I think kind of trying to help your kids be in a situation where they can make connections and friends and be liked, I think is super valuable. Like, if you're cringing about how your child's acting because you know that that's not being received well by other people around them, like, you have to somehow try to, in a loving way, help them regulate that. Yeah. So I think, like, really helping focus your kids on making friends and influencing situations based on, I guess, being good humans is probably one of the top things. I don't really think too much about how much wealth I would, like, quote unquote, give to them, I guess. I mean, I'm pretty, like, I'm a absolute libertarian and capitalist. I do think that, I think two things. I think that we all start at a different starting point. Yeah. And success is relative. So if you start from a not great spot and you get into even a decent spot, that's an amazing success. Yeah. But I do also see capital as a scoring system. Mm-hmm. So, my ambition is to eventually get to be working as a public company, to accumulate a lot of wealth. I don't know yet how that would be distributed. I don't think that it serves your kids too well to take away. Well, it's interesting, like Buffett has all this wealth and his kids aren't going to get much of it. But what he did really well was he actually helped them path their own journey and live fulfilling lives where they were achieving something that they wanted to. And I think the worst thing you can do is, and again, it comes back to that freedom, is take away the ability for them, for an individual to have their own journey and like do their own stuff and do hard things and fail.
Yeah.
And I find myself sometimes doing, when you're like, your kids aren't doing something as fast as you want, they're not getting it, and the natural inclination is to take over
Do it for them.
And I think that that's probably not great.
No, but it's a common thing as a parent. So many of us do that, right? Because it is the easier, quicker option.
Yeah.
But you're right. If you let them struggle in whatever it is.
And it comes back to presence and rushing. Like, if we can not rush them so much and not rush our time with them, they'll probably like us more as well. I think that a big part of success of being a parent is probably how much your kids want to actually spend time with you as they grow.
Yeah.
That's something I get worried about personally. I'm like, well, I'm so focused on work, and they know that, and they talk about it. And is that going to, impact my relationship with them later? So.
Is it about balance then?
TBD.
Yeah.
Yes, it's about balance, but also being focused. Like, there's no way if I had balance, I would be able to achieve the things that I'm setting out to achieve.
Yeah.
So I'm not going to say that you need balance or that you should rely on balance. I think that you have to find the balance as best you can. But to say that I'm going to have a balanced life based on the ambitions I have and the things I'm just naturally interested in, it would be a disservice to myself to create that balance.
Yeah.
Because then I wouldn't achieve
what you want to.
And it could be a bit of a cop-out, no, I'm trying to achieve these hard things. I'm going to go for it as best I can. And I'm probably going to, it's probably going to have some health costs. It definitely does, I would say.
Yeah.
So, but I guess I don't know the price I'm paying, but I guess I feel okay, going after this because I feel naturally drawn to it.
Okay. And so in terms of your household and with your family and that kind of thing, you can do what you do because your partner does what she does. Is that correct, do you think?
Well, we've designed a life where we're both pursuing our passions.
Yeah.
She's a professional artist, quite successful. Being an artist, I think, is harder than being an entrepreneur. It is being an entrepreneur, but it is hard. I would say arguably harder. And that kind of, I guess, her pursuing that is probably partially because of what I've pursued. And that helped encourage her to do that. We have had very free schedules to not be structured by a 9 to 5 ever.
Okay.
So even though I say that it's hard to be present, I spend a hell of a lot of time with my kids. I'm in proximity of my kids a lot. I put my kids down to bed every night. I cook a lot. I am there. I guess sometimes my brain's not there.
Yeah.
I'm always there, but my brain maybe not so much. So we aren't very structured. And we have a lot of time to be around the kids and around ourselves to create and do things we want to do. And we've been very lucky and fortunate to be able to do that. And we've made decisions like not having debt, not purchasing a house, and accumulating our assets elsewhere so that we had that freedom to basically have that choice.
Yeah.
And yeah, I guess, again, TBD to see how that goes. But I mean, in terms of doing the things we want to do, I'd say that we've kind of done quite well.
Okay.
Yeah.
All right. So with eccuity, what's next?
Eccuity, so just continuing to build and, demonstrate the value of the product.
Yeah.
It is the best platform on the market for dollar cost averaging into multiple buckets of assets. It's got one of the most modern and fast user interfaces on the market. So continuing to grow that out. We're thinking more about holistic financial well-being more and more, rather than transactions or
Yeah.
transacting. And then in general, how do we bring access to product? Because a lot of my interests are in product and access and tools that high net worths have. And bringing access to users that don't have access to those products or that information is a big part of what we think about. So for example, high net worth that has a lot of property, they've got a bunch of equity in properties, they get lending options and interest rates that are far lower than someone that may have $300,000 in equities that doesn't own a home, even though that set of assets is probably better collateral in many ways than a property or a property portfolio because it's marked every day, it's liquid, and so forth. So, in that case, that consumer should have access to cheap credit because they have high quality assets. And that's something just not available to everyday people. So just trying to find different avenues and different ways for people to learn about wealth, look at their wealth holistically, and ultimately achieve their goals incrementally over time. That's what we think about. And at the moment, our platform's really great at dollar cost averaging at super competitive prices. And it's got some great advanced features that I think are really great to use. And I love them because I designed them for myself, I guess. So, yeah.
Awesome.
Thank you.
All good.
Great. Well, till the next time.
Till the next time.